Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. This episode returns to gas market developments. We've seen some dramatic price movements in recent weeks, with prices soaring to almost €350, but they have since fallen back to a mere 230 or 240 euros per megawatt hour. Prices tumbled despite Russia halting flows on Nord Stream 1, as well as cutting off supplies to Engie. Increased storage could be a factor pressuring prices, but are we out of the woods yet? Joining me, Richard Sverrisson, on today's pod to talk about all things gas is Henning Gloystein of Eurasia. Welcome back, Henning.
Hi, Richard. Thank you.
And Bjørn Inge of Volue Insight. A warm welcome to you too.
Thanks for having me.
I'd like to start by talking about these dramatic price movements. So, Bjørn Inge, could you tell us what's going on? You know, why did they suddenly rise so dramatically last week, and then the next week they tumbled quite seriously?
Yeah, they rose. I mean, it's been the problem of the gradually diminishing Nord Stream 1 flows, and we had some big problems on the Norwegian continental shelf, so reduced output. Several fields and processing plants went out. So I think just market went a bit crazy there, and but of course we've seen this week quite a dramatic correction as well. And yeah, we shouldn't be surprised. There's a lot of volatility these days because we're really in uncharted territory, and there's no firm anchoring of prices anymore anywhere. So fundamentals so easy to see.
Absolutely. So if I can just ask you about these Norwegian outages, is this because, you know, the system in Norway is pumping gas at full throttle, you know, so that the system is under pressure, so these outages are more likely to happen? Or is it just, is it just something natural for the time of year?
I think it's natural. I mean, it that could play a part because they're really pulling the limit here. But I think these outages just happen from time to time, and I don't suspect we can, we'll have long-lasting problems, and I think Norwegian production will come back up again and deliver very strong output for the rest of the year.
So we've sort of fallen to about 230, 240 euros a megawatt hour. Bjørn Inge, do you expect to stay at this, or do you expect to see more volatility in the weeks to come?
Oh, more volatility for sure. We're not done with the volatility. So yeah, embrace yourself.
Absolutely. So, Henning, if I can turn to you, what do you make of these dramatic price movements?
Bjørn Inge put it well there with the uncharted territory. We've never really been in a situation where the biggest single pipeline into Europe goes on, off, goes down. And we have no idea whether they'll come back on September 2, as the Russians currently say. We had no idea until about 10 days ago that it would go off again. And it's a big piece of infrastructure. And, that gas is there or not there. And since we don't know, that means the prices go up and down pretty dramatically. And pretty much nobody has an idea of how to cope with this, apart from buying as much gas that's non-Russian as possible and putting it into storage and hamstering it.
Absolutely. And if we look at Germany, Henning, Germany has decided to empower the gas hub to buy as much gas as possible and put it into storage. What's the idea here? What's the plan?
Yeah, this is a feisty idea. I mean, the German government has clearly decided that this winter, security of supply is a priority over price. So they're kind of saying it doesn't matter how much it'll cost. We need to get those storage sites to 95% on November 1st. It's even a law, which is very counter normal market behavior, because, I mean, normally at this time of the year, you should be buying gas fairly cheaply so that you can sell it more expensively in the winter. That's what the price curve is there for. Now it's all inside out. And the normal price signal at the moment would be to sell out of storage. But the law says you need to buy storage. And so basically the market doesn't work as it should be doing at the moment. And that means that the government has gone in and said, you, the Trading Hub Europe, have the mandate now to buy gas at whatever the price is, because you must fill the storage sites by November 1st. And market players have noticed this, and they know that the demand in Germany has gone ballistic, and prices have reacted accordingly.
So do you think that's a reason for the rise last week?
I mean, it's not the only reason. I mean, I think the main reason is that was the news Nord Stream 1 going off again, but the knowledge that Germany is buying gas strategically and putting it into storage on a government mandate is definitely contributing to the prices. Yes,
Absolutely. What do you think, Bjørn?
Yeah, that's for sure. It's a natural behavior of the storage, and yeah, we saw clearly. I mean, not so much any longer, but earlier in the summer we saw a backwardation with winter prices being cheaper than summer prices, and that was clearly an effect of these storage mandates. So it's definitely kind of distorting the market, or has been. Yeah.
So where are we now? We're about 85% storage full in Germany.
yes, that's correct.
Yeah.
Bjørn? Yeah. Yeah. And when would you expect to reach this 90%?
Well, storage filling has gone much better than expected. I mean, well, it hasn't come for free. This is, why we've had these very high prices. But we're already at 85, something like that, which means that we are, well, that was the target for 1st of October for German storages. And I think with the current pace of injections, we'll see the 95% target for 1st of November being reached. I mean, likely ahead of time. So things are looking actually quite comfortable there on the storage side.
Mm-hmm. And what about in the rest of Europe?
Also good. I think we reached 80% average storage filling now. So that was the target for 1st of November. So it's already there. So I would say better than expected, and part of the reason, the reason Europe has been able to fill storages is even though we've lost a lot of Russian gas, is because we've had heavy amounts of LNG coming in. Obviously, Europe is the premier destination for LNG in the world now with these high prices. So a lot of LNG coming in steadily through last winter and this spring and this summer. But we've also had, fortunately or unfortunately, a lot of demand reductions or destruction. And those two factors combined actually have helped Europe to fill their storages. And I would say that's kind of good news.
Yep, that's good news ahead of the winter for sure. But when we get to the winter, how will that gas be sold, Henning? I mean, will the trading hub Europe sell it on the spot market? Will it sell it forward? I mean, how does it work? You've got a government agency basically acting as a trader.
Yeah, that's the awkward situation that's occurred now because, I mean, no one had a long-term plan for this. This wasn't on the books until very recently. So it's a little bit unclear. I mean, we know that the Trading Hub Europe is buying this, and it's called the strategic storage, and it's making it available in the market probably. So it'll probably be sold off commercially during the winter when demand is there. But it is a very unnatural situation. You first have government mandated purchases, and then you have commercial sales in winter. And this contributes to price volatility because you don't really know how this is going. And Trading Hub Europe is not the only outfit that is buying strategic gas. Uniper, by all accounts, is doing the same thing since they were part nationalized. So they have a government mandate as well. And other utilities also have agreements with the German government to use their trading desks to buy gas to put into storage. So it's a very muddy and difficult, tricky situation that nobody really fully understands how it's going to roll out over winter. The only positive part is here indeed, as Bjørn Inge just said, is this has contributed quite heavily to allowing storage sites to be pretty full. So this is why we said last week we actually think Germany will get muddle through this winter without level 3 emergency rationing. Unless there's massive unplanned outages, but in the LNG supply chains or from Norway.
So, I mean, if we return to the winter, Henning, I mean, how do you see it happening? Will this gas be sold to the market at a loss? Will it be partially subsidized? Will they be looking to make money on it?
No, I mean, I think this will be almost certainly be sold at a loss unless prices go even further. But then, okay, then the mandate is also during the winter to keep buying gas to keep the storage sites full. So then it'll be a double loss. I don't think at this stage Trading Hub Europe or the government in Germany is particularly fussed about how they claw back the money of these strategic purchases, and that's what I meant when I said the German government clearly for this winter is prioritizing security of supply over price.
Absolutely. What's your view here, Bjørn Inge? I mean, this seems to be sort of very, as Henning says, a very tricky situation, a very kind of muddled picture for market participants who are used to, one company trading with another, and it's now the central counterparty is the government in effect.
Yeah, it's a tricky situation, and it's a new situation, and it's probably right what Henning says, that they didn't have a long-term plan for this, and I just hope that we won't see too much market distortion because of this now in the withdrawal season, and there's storage targets also next year, of course, and in February I think Germany wants to have at least 40% filling rate, but that's not very different from the 2 previous years. So that in itself shouldn't, hopefully not be the reason for any big market distortions. But we'll just see how it goes. They will probably end up selling a lot at a loss, as Henning says.
So we're bracing ourselves for increased volatility now in the coming weeks. But once the withdrawal season starts in earnest, when it gets cold, when there's increased demand, do you expect there to be equally as much volatility?
Yes, I would. Yes, why not? I would say. I mean, in this situation, and there will be more news about Russian gas and other things could pop up, and we could have, if there's cold spells, this could have a big effect in this already stretched market. So I would say the volatility is here to stay, but yeah, I must say I'm more optimistic now than I was earlier in the summer or in spring with these when we have reached these storage targets already. So it's yeah.
No, that's good to hear. At least there is some optimism out there. Henning, this week we've seen Russia sign a gas deal with Hungary, but cut off to Engie, fully cut off all supplies, and also halt flows on Nord Stream 1. What are your expectations in terms of Nord Stream 1?
So the short answer is we don't really know, and that's part of the problem, a big part of the problem. Overall, however, it's possible that Nord Stream 1 stays off because, Russia has realized that Germany has got its storage sites full. They're still supplying sort of their allies in Europe, Hungary, and maybe not allies, but they're not quite as hostile as the rest of the EU. With gas, they also Blue Stream to Turkey is still happening. So they're still getting revenue at very high prices there, and they are inflicting economic pain where they want to inflict economic pain, and that at the moment seems to be sort of their sting point is Nord Stream 1 and Germany. And because via that entry point into the EU, you can inflict pain on the rest of the EU because Germany has 9 land borders. So you're actually extending that pain right to the Netherlands, to France, and to Austria. And that seems to be their policy. And that means, if we really have no idea whether it's going to come back on September 2nd. It really isn't a problem with the turbines. We know the turbines are ready. They're sealed. The paperwork is done. So it's just a matter of politics. And that we don't really know because we're not in Putin's head.
No, exactly. What do you think here, Bjørn Inge? Do you expect it to come back on the 2nd of September?
Yeah, I would. My hunch is that it comes back, either at 20% or perhaps lower, like 10% or something like that. So it's still like some volumes, but that can still be played around with. If it cuts off completely, then that's kind of off the table, and Europe kind of knows that's gone forever, most likely. So but it's hard to say, and but yeah, I mean, even if Nord Stream 1 doesn't come back, I think Europe can still, or Germany can still keep injecting now. I mean, I'm looking at the net injection numbers, and they will continue to go up even if Nord Stream 1 doesn't come back. So, but it's hard to know.
Absolutely. We're not, as Henning said, we're not in Putin's heads. We don't know what's happening inside the Kremlin, which makes it very difficult to second guess this. But we've talked about previously on the pod about the fact that they may be forced to flow the gas because of economic reasons in terms of the fields in Siberia. But last week, Tobias Federico discussed the fact that potentially, there could be a plan to flood the market come February, like turn the gas on fully in order to just for as much economic damage by sinking the price. I mean, is this a likely scenario in your view, Henning?
It's funny you mentioned that, because we actually published, Eurasia Group, and I also published a note, what would happen if Russia flooded the European market with gas, and we published it on the day that Nord Stream 1 got cut in June. So that didn't go down very well.
Yeah.
But it is, I mean, it's an option. I mean, if Russia decides to either maybe sue for peace via some form of a ceasefire at some point, they might decide to raise gas flows, but we really don't see that as a likely outcome at the moment. But at some point next year, it might happen. And the best way to sting the US LNG industry is indeed to raise gas output and crash that price, and then a lot of fancy hopes in the United States start looking a bit silly, and long-term contracts maybe that were signed in the meantime. So that it's not outside the realm of possibility, but so far we've seen very little sign of Russia doing that. But I mean, never say never.
Exactly. What do you think, Bjørn? Is it a likely scenario?
It's an interesting speculation, yeah, and it's a good argument with the Henning says it can hurt the American LNG industry and create havoc with these massive price fluctuations or price drop you will see then, of course. But in some ways, it would also be good for Europe if they do it. So yeah, I'm not really sure what to think about that theory. Let's say we'll just have to see.
But another factor that also we talked about last week is the demand destruction. And have you in Europe? I mean, what do you think, Bjørn? Where has this been happening, and is it likely to continue to are we likely to continue to see closures of large industrial units?
Yeah, unfortunately, I think so. We'll only see in the beginning. I think I looked at the numbers, and it seems like German Q1 demand was down 10%, and in Q2 German demand was down 20%, and that's from a lower absolute level, of course, in Q2. But demand is down significantly, and it's all over the place. I mean, obviously, there's no gas running in the power sector if there is any other alternatives, but its industry has been shutting down. In particular, it's been challenging for the fertilizer and the aluminium metals industry. I mean, their margins are very, very, very negative, and you can't. Some of these industries you can't just snap your fingers and turn them back on again either. So I think we'll see more of industry cutting off, and also the residential households are saving gas, of course, a lot, and everybody's contributing. And in Germany, they will increase, households will see increased prices now from 1st of October. So that will kind of even drive savings a little bit more, I think. So yes, and but as I said, this is absolutely crucial now, and it's a reason why Europe has managed to fill storages at the moment.
What do you think, Henning? What's your view on the demand destruction and the outlook for the coming months?
So I've actually spent quite a bit of time with German industrials over the last couple of weeks, and it's a fairly unified picture we've got, a clear picture. We seem to have the view now that about 50% of demand destruction long term is permanent. So of the 20% that they're targeting to reduce output on the industrial side at the moment, they reckon about half of that they can permanently reduce by just investing into efficiency. This is largely big industrial companies that have cash and that can invest into reducing consumption structurally. And of the remaining half, 25% is just short-term shock, what Bjørn just said, just shut down stuff. And that will come at the cost of GDP drops, probably a recession. And the other 25% would be the sort of stuff that you can drive down for a year or maybe 6 months or up to a year, but then you really need to have to bring it back up again. So it's a mixed picture, but I think we're going to see fairly long-term and permanent demand destruction coming out of this, because a lot of companies are investing quite heavily to just, for instance, rip out gas heaters and invest into efficiency and alternative fuels.
So the outlook there is maybe not that optimistic then, Henning.
For the next 6 months, no. I mean, we're definitely probably Germany's already in a recession, and if that's the case now, and Bjørn said retail prices will go up on October 1st, industrial prices. will remain high, and that means Q4 and Q1 probably, well, almost certainly, I think, will be a contraction.
And with these elevated prices, you increase the cost of living crisis, and people. There will be increased pressure on politicians and on policymakers to do something. We've already seen noises coming from Germany and from the Commission that the current market design is not fit for purpose. What do you see? Maybe it's more related to power markets, but I think it also affects the gas market. What do you see in terms of market intervention coming forward? I mean, there's very little clarity and details at the moment, Bjørn Inge. But do you expect changes to be made, and what kind of changes?
Yeah, I expect changes to be made. There's so much dissatisfaction now with the current states and the high prices, and people and politicians don't understand why a small amount of gas, if a small amount of gas is needed in the power sector, then all the power price is reflected in the gas cost, and it's just been growing the call for a change here. Germany has been reluctant to do anything, but now they are also in for a reform there, and they want to. Yeah, the thing is to decouple gas from power, basically, and there's several ways to do it. In Spain, they already did it. They put a cap on the gas price, as seen in the power sector. But you could do that, or I mean, I just hope they don't do anything too radical. The marginal pricing system in the power sector has been serving us well for decades now, and it's really a very efficient way to manage the power system under normal circumstances. And if they just have to be, they probably want to do an emergency intervention and they want to do it quickly, but they should also really be careful to avoid unintended consequences such that will actually, increase gas demand, for example, if you artificially lower the gas prices or decouple the market. But they will for sure take action. It's unavoidable now, I think, at this stage.
Yeah, and I mean the marginal pricing model seems to have come under a lot of criticism, a lot of pressure in recent weeks. Yeah, I mean, what do you expect, Henning? I mean, do you think that Germany, for example, could follow the Spanish example? Could it, maybe in some sense redistribute some of the windfall profits that are being earned by renewables generators?
Yeah, a lot of tricky things there. I mean, I think the crucial message there is, and I totally agree, is that the German government has now also come around and said, okay, we need to do something. And they were very reluctant until very recently, but they're going to do something about it. They are, I'm fairly certain, going to try and somehow decouple the renewable market from the gas market or a fossil fuel power market. But there is no clear solution yet. Now, in terms of windfall taxes, Germany has a bit of a tricky situation because it doesn't have big oil and gas companies that it could tax, like, as is the case in Britain. But so the only windfall you can do is indeed tax the renewable guys. But of course, that sends a terrible signal because you actually want to incentivize investment into renewables to reduce dependency on gas. So taxing them is a bit and it's also actually fairly unpopular in Germany at the moment. But it might be the only way out because the German government, like every other government in Europe at the moment, desperately needs revenues to somehow support households and maybe small industries. And so they need to tax companies that are accidentally or intentionally profiteering from this situation. And in Germany, that might actually be the renewable industry. So yeah, it's possible that that'll happen.
Yeah, I mean, but there is a case, isn't there? Because they have, if they're sort of unhedged producers of renewable energy, they're making bumper profits. I mean, with power prices at sort of 500, 600, 700 euros per megawatt hour, when you have zero marginal cost, that's a phenomenal profit margin.
Yeah, I wish I had a wind park and a solar park at the moment. It would be fantastic.
Yeah,
and
exactly.
I'd even pay some tax.
Yeah. But in Norway, do you expect the government to announce any changes to the market design, Bjørn Inge? There's a lot of pressure more on the power price in Norway, but when it comes to the gas or oil sector, what are there any likely changes ahead?
No, I think not. I mean, there's more potential for. I mean, the climate for exploring and increasing gas production in particular has improved, and so we'll probably see in the short term, the next few years, a better outlook than we previously expected. But yeah, I don't see any big changes in the gas sector or in the power sector. I mean, what's been talked about in Norway is to limit power exports to the continent, but that will only happen in the event that there's a security of supply issue here with very low hydro levels, and I don't think we'll get there. And it's kind of it doesn't fit with the free market system that we've had in Europe. So I don't see any big changes really.
Mm-hmm. Okay, but I'd just like to round off by talking a little bit, touching upon about LNG, and I think and potential supply to Europe. I mean, if you have very high demand in Asia, would that limit the supply coming to Europe, Henning?
I mean, at current prices, I mean, if you've got gas, you'll send it to Europe. I think the issue is not that it's going to be limited to coming to Europe if demand in China, Japan, South Korea goes through the roof. We've already seen more fallout and sort of collateral damage, as you might call it, is that emerging markets are being squeezed out of LNG supply. So we've seen that Pakistan hasn't managed to attract a single cargo for many months now, although it actually had a contractual agreement to receive LNG, but it didn't come because the fee for not delivering was lower than the revenue from delivering into the spot market into Europe. So I think the damage that is happening to the global LNG market here is in emerging markets like Southeast Asia. First of all, because they're not getting the LNG that they want to right now, but it also is really, really scaring any investment into new LNG import facilities. If you sit, for instance, in Thailand right now and you're wondering whether to buy develop an LNG import facility, and you look at the market, I think you're going to start crying and saying, no, thank you. And I think this is really destructive for the LNG industry. I mean, they enjoy sky-high profits at the moment, but for emerging market demand, this is really not good.
Yeah, it sounds very catastrophic almost. I mean, Bjørn, Inge, what's your view on, for example, will Europe or companies in Europe manage to sign more LNG deals with Qatar or US, or are we maxing that out at the moment?
Yeah, we've been signing several deals now lately, and the new floating import units that will come in Germany and the Netherlands, they will be fully utilized. So I think Europe will get the LNG they want, but it comes at a price, of course. And as Henning says, Asian demand can go up, but I think I see Europe as the premier destination for LNG going forward, and it's the big substitute for Russian gas, and it's good that we'll be able to get more of it, and it will also, when Germany gets their LNG and also more LNG import capacity in the Netherlands, we'll see the spreads in the gas market that has been developing this spring go back in again. So UK, France, Spain has been enjoying slightly or a bit cheaper prices now than Germany, for example, this summer, and but that's probably going to be more closer together again going forward.
Gentlemen, there are some rays of sunshine, but not many. But thank you very much for joining the Montel Weekly podcast.
Thank you.
Thank you.
So, listeners, you can now follow the podcast on our own Twitter account, aptly named the Montel Weekly Podcast. Please direct message any suggestions, questions, or let us know if you think you have a good idea for a guest on the show. You can also send us an email to podcast@montelnews.com. Lastly, remember to keep up to date with all that's happening in energy markets on Montel News. You can subscribe on Apple Podcasts and Spotify, or wherever you get your podcasts from. Thank you and goodbye.